Welcome to the Wyckoff Crypto Discussion. I am Alessio Rutiliano, and as usual, every Thursday we analyze crypto assets through the lens of the Wyckoff method. This is episode number 8. Thank you so much for your feedback, your comments. Feel free to leave your comment below. We'll be happy to discuss all of your questions. This information is for educational purpose only. It's not an investment recommendation. So please stop the video and read the full disclaimer. As usual, our special guest today is Roman Bogomazov. So, Roman, are you ready for another episode?
Yes, let's go for it.
So today, I would like to start our analysis with these two long-term charts. So let's focus on Bitcoin, 3 days time frame. We have discussed this multi-year accumulation structure many times, and I'm sure that all of the students of the crypto trading course that we had in July at Wyckoff Analytics will remember this structure and all the Wyckoff events that we have discussed. So let's quickly review the main concepts. At the beginning of the chart, we see what Wyckoff used to call a hypodermic top. After the massive bull run in 2017, institutions had urgency to sell, and they sell on the way down. The sentiment quickly shifts from euphoria to panic in a couple of weeks. We finally have a selling climax in early February at point 2, followed by an automatic rally at point 3. This is a classic stopping action that defines the boundaries of this multi-year structure that since then is developing in line with the S&P. What happens next? We see lower lows and decreasing volume throughout 2018 that suggests that institutions are not active in the crypto space. And when you compare Bitcoin with the structure of the S&P, you can instantly see clear underperformance. So lower lows suggest lower prices. Institutions come back again in the extreme oversold area at point 6. We have a local area of accumulation there. And then at point 7, a sign of strength rally breaks the level of the automatic rally, and then profit taking takes place. So look now at the whole area that we have highlighted with a dotted line. We discussed this run formation in the first issues of the Wyckoff Crypto report. So decreasing volatility and volume in this area indicate that supply is exhausted. We start seeing some local outperformance, but at point 9, the COVID reaction triggers massive liquidations in many assets, and Bitcoin, like gold, become a source of funding. So smart money once again take advantage of lower prices and massive liquidity and buy, and we make a higher low compared to the S&P. Price quickly recovers, we commit above the area where the original selling came in March, and we stay above on lower volume, and this way we are slowly climbing a wall of worry. So in the short term, we have another important resistance level to overcome on Bitcoin around 13,000. But what's really important about this chart is the fact that in the last few months, we have made higher highs on decreasing volume. What does it mean? Supply has been absorbed, and now we are likely in the final part of this trading range, in late phase D or early E. Why this information is so important? Each Wyckoff phase is associated to specific conditions of volatility. So in the final part of a accumulation range, supply is so exhausted that price can easily go up on lower demand. And there is generally more ease of movement to the upside compared to the first half of the range, where the process of absorption was still in place. So as you can see, Wyckoff phases are not abstract concepts. They are so practical. The Wyckoff phases help us to understand what kind of price movement and volatility we can expect in the next weeks or months. And yesterday, we had a very interesting upper in line with what we have discussed last week. But what I found really, really interesting is the fact that Bitcoin has just had a 12% up move while the S&P was in red yesterday. So should we expect from now on a break of the long-term correlation? No, outperformance of one day is a thing. Outperformance for several weeks is another thing. So this is just another useful piece of information that confirms that the big picture that we have just had is bullish for the long term. Supply is low, so low that Bitcoin can even rally on low demand while the rest of the market is in red. That said, the gravity of the market, as Roman says, can always affect prices, especially in the short term. And we have seen this on that big COVID reaction. But in the long term, week after week, Bitcoin is slowly climbing a wall of worry. So before we focus on the short-term scenarios, Roman, what's your view on this multi-year formation on Bitcoin and on the market?
All right. Well, lately, our students, especially in the more advanced classes, were starting to bring flashcards. So I like this idea of flashcards. It's just one idea that, gives you some kind of perspective on the chart. So here's flashcard number one. When we look at this long-term chart, I am thinking about two areas of accumulation. This one right here and this one right here. Both of them are downsloping ranges. So you could see how the structure unfolds here. Here's more of the wedge formation. Here's more of the downsloping structure right here. In both cases, another flashcard, the movement down concludes with the emergence of institutional presence. So there is a lot of volume signature, and this is where big interests come in. The volume like that cannot be created by the retail people. So this is where institutions are starting to buy. We want to take a note of that. And then when conditions starts to improve, this is where we want to get in. So all of those points of entry are very, very good. My second observation is that if we have this type of downslope and structures, we're basically climbing above those points of the resistance. We are above it now. We're above now the points of the resistance that were more local in the trading range after initial distribution and after initial decline. So I would start, this range somewhere there, and we are above it. So the movement of the price should be much freer. We don't need to have as much demand, as we have had, let's say, off the low into this rally. Look at how the price moves. Lower demand pushes the price up to new highs. So there is a commitment above in the bullish type of manner. And that constitutes an ease of movement. This is how ease of movement happens. Commitment above on diminishing effort characteristic, just because the opposing force, which is supply, is actually being observed, has been observed before. Another observation that I would make, the way how the price moves, I think that we're going to overcome before the end of the year this high right here. And then obviously all eyes are going to be on 20,000. So I think in 2021, we're going to attack this high. We're going to retest it somehow at some point. My first assumption is going to be that we're going to go above 1400 and then try to consolidate like we did with S&P. Overcoming a long-term resistance is a big deal. So it takes some time to consolidate and then continue the movement to the upside. And that's kind of like what we might expect here around this area before we actually start moving up again, and then again some kind of more meaningful consolidation within the context of the more secular uptrend. Well, Alessio, I have a question for you. So you're just comparing here a Bitcoin to the S&P structure. So any similarities, any differences, anything that you could tell us?
Yes, of course, the COVID reaction is impressive in both assets, but look, that is a higher low compared to the S&P. So that could be a first clue about performance, I think. This is very interesting because we were seeing some signal of outperformance before the COVID reaction. Then outperformance continues on the way down. And now that the crypto market is underperforming Bitcoin, Bitcoin is outperforming the S&P. So I think that this chain of events is very interesting, Roman.
Okay, well, let's look at some other charts, and let's look at the intraday. So here's the 1 day. So what do you see here?
So last week we have said if the local resistance turns into support, we're going to revisit the high. And this is exactly what has happened. And now we are trying to commit above the high. Supply is not extreme. I would like to see further testing here, but so far so good. And what I find really interesting is the fact that the S&P is in the same structure situation of Bitcoin a few days ago, but we are still waiting for confirmations. Remember, we are still in phase B of a larger consolidation. I think that even though yesterday Bitcoin has outperformed the market, the structure of the S&P in the next days can potentially have a strong impact on Bitcoin. If the S&P will hold around this level, it's possible to see further continuation for Bitcoin too. But especially if we have some kind of bearish catalyst for the S&P, that could affect Bitcoin as well, at least in the short term. So as usual, the key is not to predict the future, but to prepare for it. What are your thoughts here, Roman?
Right. So if we would be thinking about any type of analogs or correlations between these two markets, we would be noticing that, yes, there is some correlation where the price moves in the same direction, where the price consolidates through the same time period, where the price goes down in the same period. We could see that Bitcoin is a little bit earlier. Well, actually, hold on a second. This is where is this? So like mid-March. So we are somewhere here. So Bitcoin low actually was, I believe, on March 16th, if I'm not mistaken. You gotta check this out for me. But it bottomed earlier and started to go up. We also are noticing that the tops are being made a little bit earlier as well. So there is some kind of earlier performance by the Bitcoin. So if we are thinking that this area is exactly what we're experiencing here in the S&P, then logically the next continuation for the S&P is going to be to the upside out of this position. Now, yesterday in the WMD class, we were actually reviewing both scenarios, to the upside and to the downside. And for the S&P, with our thoughts here is that we could easily go to 3,600, even produce some kind of upthrust right here like the Bitcoin has produced. And Bitcoin with this analog is showing that maybe there is some kind of possibility of this kind. At the same time, obviously there are quite a few catalysts that are in front of us. The stimulus package, the coronavirus, increase in cases, right now, rapid increase in cases, and obviously the election. So we'll have to, be more aware of the news-driven environment for the next couple of weeks. All right, Alessio, next one. Oh, I like this one.
So what could be the best long-term scenario for Bitcoin? Well, I think that this analog with the structure of Chainlink July is compelling. In the Wyckoff trading course, we focus not just on consolidation trading ranges, but also on trends. After all Wyckoffians are trend followers. And Raman has shown us countless times that a trend is generally composed of several stages. And here we see a first momentum move that follows that extreme oversold condition, an area of slow absorption, low volume, and then a final stage with the speculation stage. And I like this idea that we are still in the absorption stage in the uptrend of Bitcoin. And if this analog with Chainlink will work, Once again, Chainlink, the former leader of the bull run in cryptos, has pointed the way. What do you think about this chart, Roman?
Yeah, I really like it because I like the whole idea that we're looking at the trend and we're uh, understanding the texture of the trend. We understand different phases of the trend. Like, the trading range would have phases. Uh, the trends, whether down or up, are going to have their own phases. And, I talk about this in the WTC, both part one and part two. And here we're seeing the example of this. And I kind of like also the comparison that Alessio is putting here with Chainlink. This is the previous move up that happens after the same type of the shakeout action. And look how the recovery happens into the high of the shakeout bar first. Bitcoin is actually showing a little bit more outperformance here. And then speculative continuation after the area of the absorption. And that would definitely bring us above 1400. So, and that's kind of like the idea that we are thinking about, for the Bitcoin. Okay, yeah, very excellent chart, Alessio. Okay.
Thank you. So let's see what's happening in the rest of the market. So volatility to the downside on the shitcoin index is decreasing, but Bitcoin is still outperforming small caps. And Bitcoin has many points of structural strength. And generally, this kind of outperformance tends to persist for a while. So it's possible here to see some technical rally on the shitcoin index. But I think that crypto traders should look for clear signs of a switch of the outperformance before switching from Bitcoin to speculative altcoins. I think this concept is very important. For example, let's say that we have some profit taking Bitcoin. A small reaction comes, and then the shitcoin index shows inability to react. That would be a first sign that capitals are starting to enter small caps too. For now, I do not see that confirmation, Roman. So what's your view on this?
Yeah, we don't see like a very strong movement up here. I mean, we definitely seen some recovery. There is some kind of reversal that is happening here. So if I would be trading this, I would be thinking, light position size, some kind of probe positions here, because we are basically, and I call those structural trades. It's based on the structure itself. It's not based on anything else like an outperformance, as Alessio was saying that the shitcoin does not have at this point. I think that this whole idea that we had last week, where we're saying that the Bitcoin is starting to outperform because it was a flight to safety quality, and we're seeing how the volume is actually coming in. We don't see it here yet, so that's why I'm talking about more of a structural trade. If it's gonna take us to the highs, let's say, of the trading range, this is our expectation. This is what we would be expecting, and then we could decide whether we're gonna keep this trade or not. So obviously not a recommendation, just a tactical analysis as to what is happening here. But Alessio is completely right. Bitcoin is a place to be right now.
So the large cap index is acting much better than low caps. We have committed about the resistance. So Bitcoin is still outperforming, but I think that this is a constructive sign in the long term because generally capitals flows to large cap first and then to small caps. So this is a constructive sign. I think that a structured trade is possible too. And we will review today Ethereum, one of the best performing assets. So before that, Roman, your thoughts.
Yeah, I like this better than the shitcoin. Obviously, it's stronger, and that strength is in the upper part of the trading range. And I want you guys to keep remembering this because usually when the price consolidates and how David Weiss would say, hugging the resistance or hugging the support. That usually would mean that we're going to start outperforming here and actually having some kind of momentum characteristics. So I would be expecting that the price of the altcoin index might actually try to hit 840. So let's just see if that's going to happen. And definitely in between the Bitcoin and the shitcoin. So, you know, the second best performer.
So let's see now one of the large caps, Ethereum. This is a weekly chart. So multi-year double bottom formation with aggressive buying in the first half of the range, and then a low volume reaction and the final shakeout. That was the COVID reaction, followed by a very dynamic rally, a sign of strength. Now we are in a potential backing up action. So when I saw that big volume bar, I expected a more prolonged consolidation of the backing back action, to be honest. But look here, volume is still contracting. This is very interesting and constructive. And so it's still possible that this apex formation will continue for some days or weeks, but the big picture here is very bullish, I think, Roman.
Yes, I would say so. I mean, just the upsloping structure itself. I like how in phase B we have signs of outperformance. So this upthrust action is acting as a minor sign of strength. And then look at the texture with which the price declines. There is really no selling here or no substantial selling. And then a very dynamic rally out of the low in 2019. And then, you know, COVID is something that is some event that we have to think as a abnormal event, abnormality. This is an abnormality to the structure. It was not supposed to happen. It might not have happened under certain circumstances, but it did happen, and therefore it influenced the structure this way. So to me, what was prior as bullish is just basically transitioning into still bullish scenario after the COVID recovery. And what's not to like here? The rally is very dynamic. Demand now is coming in with more aggression than before, and it's sustaining the uptrend. It's making the higher highs, higher lows. So everything looks very bullish. Alessio talked about this bar, so it looks like some absorption at the higher level. And we are holding, and that's the key, is that supply appears, and it's always like this. Supply is going to appear at certain spots, and we have to be able to make a judgment. What does it do? Does it take us down, or does it allow the price to stop, consolidate, absorb that supply and start moving up? And we're seeing a lot of bullish signs here.
So this is still Ethereum on the daily chart. I think that this chart is very constructive. We see here a commitment above the local resistance, and maybe that we will try to retest the high. And I think that it will be very important to see a commitment above the dotted line. And this chart, I think, is very bullish because the volume signature for now is still low. And that's some kind of ease of movement here because we're committing about the levels. That's the beauty of the ease of movement. We are committing, but the volume is still low because we need a low demand at this point of the structure to commit above an important supply level. Your thoughts, Roman?
Yes, so on the intraday, now we're seeing what that big daily bar was associated with that volume increase. This was just a change of behavior and kind of a more complex structure here because it actually also is an effect to the cause that we see here with the stop in action right here. So the most efficient exit was actually here and not on the upthrust itself. If we, picked it up somewhere here, here, and then here. So this was the most optimal trade that you could create, in this area. And now, this this causality has produced this change of behavior, it's not that threatening. It's going into the body of the initial change of behavior and into the climactic automatic reaction action, and then it just consolidates. So definitely a very bullish, development in the way how it, without a lot of demand signature, goes up. But we have to be a little bit cautious here. Would we have some kind of reaction back before it starts, going up? So I would be thinking about this spot very tactically. Was thinking, if I'm going in, where is my stop loss? So obviously below some levels of support that are meaningful. Okay.
So this is the Grayscale Ethereum Trust. This is for stock traders that want to be in the crypto markets as well. So this is a very liquid structure. But I think it's still constructed because we have here what Bruce calls the IPO disease. I think this could be called an IPO disaster. And then accumulation on the bottom of the structure, and a huge range on the top of the form of the previous range. And now what we see here, a big reaction of small spreads and decrease in volume, and some signs of life on the bottom. So I think this chart is very interesting, even though we must remember that this is a very illiquid ATM. So we want to be very careful because illiquid assets move in a specific way. And this is a logarithmic chart, so very interesting. Your thoughts, Roman?
Yeah, I don't necessarily like how the volume signature suddenly is so much larger. So there is definitely more participation. It's not like they're selling, they're just participating more right here. So it's kind of a little bit questionable. Could we use this volume signature for comparative purposes? Having said this, you definitely can localize your analysis to how the volume is showing up, and we're seeing that there is diminished volume characteristics going into the support area. Now, this is all just basically saying that we are not interested in this asset, at least for now. And this, again, is more of a structural trade that is being shown to us here with the potential, to go in and to start thinking that we are in the trading range environment. So then what would be the next move? Well, somehow, an attempt to go up into the highs of the trading range. So that's how I would be approaching it. Probably would be just looking more at the actual Ethereum rather than this one, just because of, volume characteristics and how this asset behaves.
So this is a chart of Chainlink, and look how we are entering a very prolonged consolidation. I think this is very important to show our listeners that after such a huge run and hypodermic, generally we have long trading range. And so you can trade, have some kind of structured trade within the boundaries of this trading range. But we also want to keep in mind that we are probably still in phase B. And phase B could be very tricky for intraday traders because volatility increases. So there are opportunities within the boundaries, but you always want to be very careful. And what are your thoughts on this chart, Roman?
Yeah, I would agree with this. Not a lot to add. It's just that we still don't have a lot of constructive action, price action here after this decline, after the hypodermic decline. So would definitely be looking at this, but would be thinking about, how the structure unfolds.
Same story on YFI. And I really like this chart, not because this is very interesting for now because it's not outperforming, but I really like the structure because it really reminds me of Bitcoin in 2015. a big structure, possibly a round formation, really, really tiring, but this can be a long trading range that will be with us for the next months. So interesting chart, but definitely not outperforming.
Yeah, I would be thinking, Alessio, that if we would be comparing it to specific structures in the past, how would low liquidity, big structures unfold into a reaccumulation and the subsequent uptrend? So probably just still more consolidating and then suddenly a spike up and then consolidating again, spike up again, consolidating again. It's this type of action that allows us to think that demand is finally coming in, and then that demand does not allow the supply to be present and to take the price down. Only this type of change of behavior, I would be thinking, that something is going on, and I would be, it would start catching my attention. But as of currently, obviously, there might be some short-term trades right there, but nothing, that we would say like, oh, it catches our eye in a significant way. All right. I believe this is the last chart.
Yes, this is a question by Claudio. So Claudio is asking, what kind of scaling do you use on PNF charts for cryptos? Well, for cryptos, generally, I want to stay in the 3% or 5% range of the accumulation range that we see on this chart. For example, here, what we see, 30 cents, I want to stay around 3 cents. So what do you think about this approach, Roman? Because I've been backtesting this process for a long time, so I'm really curious about your opinions here.
Well, the key, I think, is to test different box sizes. For those of you who are into the PNF, you know how difficult it is to come up with the box size and the reversal size that's gonna be effective. So the way how you do this is, you kind of experiment a little bit, and then the way how you experiment is you take what has happened and you know that there was a conclusion of that, and then with the specific scale you try to see whether that scale help you out to define the area of where the target is. And if it does, then start using it, and it means that going forward that's probably going to be the correct size for your box size. Alessio?
Yes, absolutely. And I think that in next weeks we will discuss PNF charts in more depth.
All right.
Because this is a very hot topic for crypto traders.
Absolutely, and looking forward to that. And obviously, PNF, the Wyckoff PNF, is so much different than the conventional PNF, where the vertical counts, the vertical breakouts, kind of like the majority of the methodology. In Wyckoff method, the horizontal counting, defining the extent of the causality and the potential extent of the effect of that course, that's definitely the way to go. Alessio, really good episode. I'm looking forward to next week.
Yeah, very interesting session. Can't wait for the next week as well.
Thank you guys, and bye-bye.